Hello, welcome to my YouTube channel. In today's video we will be discussing about stock market for beginners, break down the basics of stock market, investing for beginners including stock picking and portfolio management. The stock market can seem like a daunting and complex world, especially for those who are unfamiliar with it. However, investing in the stock market can be a great way to grow your wealth and secure your financial future. With a little bit of knowledge and a lot of research, anyone can become a successful investor. In this video, we'll take you through everything you need to know to get started in the stock market. From understanding the basics of stocks and how to pick them, to managing your portfolio and minimizing risk, this comprehensive video will help you navigate the often confusing world of investing. So, if you're ready to learn how to invest in the stock market and take control of your financial future, sit back and listen. Understanding the basics: what is the stock market and how does it work? Before diving into the intricacies of investing, stock picking, and portfolio management, it's crucial to establish a solid foundation of understanding the basics of the stock market. For beginners, the stock market can seem like a complex and intimidating entity, but with a little guidance, it becomes much more approachable. At its core, the stock market is a platform where buyers and sellers come together to trade shares of publicly listed companies. These shares represent ownership stakes in these companies, and when you purchase shares, you become a shareholder and have a claim on a portion of the company's profits and assets. The stock market operates through exchanges, such as the New York Stock Exchange, NYSE, or NASDAQ, where buyers and sellers can execute transactions. These exchanges provide a regulated environment for transparent and fair trading. Stock prices fluctuate based on various factors, including the performance of the company, the overall economy, investor sentiment, and market demand. Investors aim to profit from these price movements by buying stocks at a lower price and selling them at a higher price. To facilitate investing, stocks are often categorized into different indices or groups based on certain criteria. For example, the S&P 500 index includes the 500 largest publicly traded companies in the United States, giving investors a benchmark to assess the overall market's performance. It's important to note that investing in the stock market comes with risks. Stock prices can be volatile, and there are no guarantees of returns. However, with careful research, analysis, and a long-term perspective, investors can potentially achieve growth and generate wealth through stock market investing. As a beginner, it's essential to familiarize yourself with key concepts like market orders, limit orders, stock exchanges, indices, and the overall functioning of the stock market. This knowledge will lay a solid foundation for your journey into the world of investing and empower you to make informed decisions as you navigate the complexities of stock picking and portfolio management. Investing versus stock picking. What's the difference and which one is right for you? When it comes to navigating the stock market, one of the fundamental decisions you'll need to make is whether you want to focus on investing or stock picking. While these terms are often used interchangeably, they actually represent two distinct approaches to building a portfolio. Investing, in its simplest form, involves buying shares of a diversified range of companies or funds with the intention of holding onto them for the long term. The goal is to benefit from the overall growth of the market over time, rather than trying to predict which individual stocks will outperform others. This strategy is often favored by those who prefer a more passive approach and don't have the time or inclination to closely follow market trends in individual companies. On the other hand, stock picking involves actively selecting specific stocks based on an analysis of their financials, industry trends, and other factors. This approach requires more research and active monitoring of the market, as the aim is to identify undervalued stocks that have the potential to deliver higher returns than the broader market. Stock pickers often enjoy the thrill of researching and discovering hidden gems in the market, and their success largely depends on their ability to make accurate predictions. So, which approach is right for you? It ultimately depends on your investment goals, risk tolerance, and time commitment. If you're a beginner with limited knowledge of the stock market, investing in a diversified portfolio of low-cost index funds or exchange-traded funds, ETFs, may be a good starting point. This allows you to benefit from the overall growth of the market while minimizing the risk associated with individual stock selection. On the other hand, if you have a deep interest in the stock market, enjoy conducting research, and have the time to actively manage your portfolio, stock picking can be an exciting and potentially rewarding strategy. However, it's important to remember that stock picking requires a higher level of expertise and carries greater risks, as individual stocks can be more volatile and unpredictable. How to get started: opening a brokerage account and setting a budget. When it comes to getting started in the stock market, one of the first things you'll need to do is open a brokerage account. A brokerage account is essentially a platform that allows you to buy and sell stocks, bonds, mutual funds, and other investment products. There are many different brokerage firms out there, so it's important to do your research and find one that aligns with your investment goals and preferences. To open a brokerage account, you'll typically need to provide some personal information, such as your name, address, social security number, and employment details. You may also be asked about your investment experience, risk tolerance, and financial goals. This information helps the brokerage firm assess your suitability for different types of investments and provide you with appropriate recommendations. Once you've opened your brokerage account, it's important to set a budget for your investments. This budget should be based on your financial situation, your investment goals, and your risk tolerance. It's generally recommended to start with an amount of money that you're comfortable potentially losing, as investing in the stock market involves some level of risk. Setting a budget helps you establish discipline and avoid making impulsive or emotionally driven investment decisions. It's also important to regularly review and adjust your budget as your financial situation and investment goals change over time. Stock picking strategies, fundamental analysis versus technical analysis. When it comes to investing in the stock market, one of the most crucial decisions you'll face is determining which stocks to invest in. This is where stock picking strategies come into play. Two common approaches to stock picking are fundamental analysis and technical analysis. Fundamental analysis involves analyzing a company's financial statements, industry trends, competitive landscape, and overall economic factors to assess its intrinsic value. This approach focuses on understanding the company's business model, revenue growth, profitability, and potential risks. Fundamental analysts believe that by thoroughly scrutinizing a company's fundamentals, they can identify undervalued stocks with the potential for long-term growth. On the other hand, technical analysis relies on studying historical price patterns, trading volume, and other market data to predict future price movements. Technical analysts use various tools like charts, trend lines, and indicators to identify patterns and trends. They believe that past price and volume data can provide insights into future market behavior, helping them make buy or sell decisions. Both strategies have their merits and limitations. Fundamental analysis provides a comprehensive understanding of a company's financial health and long-term prospects, while technical analysis focuses on short-term price trends and market sentiment. Some investors prefer to combine both approaches to gain a more holistic view of a stock's potential. Ultimately, the choice between fundamental and technical analysis depends on your investment goals, risk tolerance, and personal preferences. It's essential to do your research, understand the strengths and weaknesses of each strategy, and determine which approach aligns with your investment philosophy. Building a diversified portfolio, spreading your investments across different sectors and asset classes. Building a diversified portfolio is a crucial step in successful investing. By spreading your investments across different sectors and asset classes, you can minimize the risk of losing all your capital in case one particular investment performs poorly. Diversification allows you to potentially benefit from the growth and stability of various industries and markets. When it comes to sectors, consider investing in a variety of industries such as technology, healthcare, finance, consumer goods, and energy. Each sector has its own dynamics and can react differently to market conditions. By having exposure to multiple sectors, you can balance the performance of your portfolio and reduce the impact of any negative developments in a single sector. Furthermore, diversifying across asset classes is equally important. Consider including a mix of stocks, bonds, and alternative investments such as real estate or commodities. Stocks offer the potential for higher returns but also come with higher volatility. Bonds, on the other hand, provide stability and income but with lower returns. Alternative investments can add further diversification and potentially reduce the overall risk of your portfolio. It's important to note that diversification does not guarantee profits or protect against losses, but it can help you manage risk. Additionally, regularly reviewing and rebalancing your portfolio is essential to maintain diversification. As market conditions change, the performance of different sectors and asset classes may vary. Rebalancing involves selling investments that have performed well and reallocating the funds to underperforming areas, ensuring that your portfolio remains diversified. We hope this beginner's video to investing, stock picking, and portfolio management has shed light on the often mysterious world of the stock market. Investing can seem intimidating, but with the right knowledge and strategies, anyone can become a successful investor. Remember to do your own research, diversify your portfolio, and stay disciplined in your approach. Whether you're just starting out or looking to refine your investment skills, we hope this video has provided valuable insights to help you navigate the stock market with confidence. Happy investing! Thanks for watching. Don't forget to like my video, comment and subscribe to my YouTube channel, and also don't forget to turn on the notification button for more videos.